Stop for a second. Before you scroll past this, I need you to hear something important. There is a rule, a real rule, backed by the Social Security Administration and the IRS, that quietly affects how much money actually lands in your bank account every single month. Most retirees have never heard of it, and the people who are hit hardest by it are often the ones who need every single dollar the most. Here is what I mean. When your Social Security payment comes in, most people assume that number is final. That is your money. Done. End of story. But that is not always true. For millions of retirees right now, money is being reduced before it ever reaches them. Medicare premiums, federal tax withholding, overpayment recoveries, these are real deductions that come directly out of your benefit, and they can add up to hundreds of dollars every single month. And here is the part that catches people completely off guard. The rules around one of these deductions changed significantly in 2025. The Social Security Administration overhauled how it collects overpayment debt from beneficiaries, and millions of people received notices in the mail that they may not have fully understood or may not have responded to. If you have not compared your actual deposit amount to your full benefit amount recently, now is the time. Because what you are receiving and what you are owed may not be the same number. Now, before we go any further, I want to say something clearly. This video is not here to frighten you. I am not going to throw legal terms at you. I'm not going to tell you your benefits are disappearing. That is not what is happening, and I am not going to exaggerate just to hold your attention. What I am going to do is explain, in plain, everyday English, exactly how your deposit gets calculated, where the money can go before it reaches you, and what you can actually do about it. Because here is the truth. The more you understand about how this system works, the better protected you are. When you know what deductions are normal, you can catch the ones that are not. When you know your rights, nobody can take advantage of you. And when you know what questions to ask, you stay in control. That is what this video is for. We are going to cover the 3 biggest reasons your deposit might be smaller than your stated benefit. We are going to talk about Medicare premiums, voluntary tax withholding, and the SSA overpayment policy change that has affected people across the country. And we're going to talk about what to do if any of this applies to you. No panic, no guessing, just the facts you deserve to have. Let's get into it. Let's step back for a moment. Let's make sure we understand how Social Security payments actually work from the beginning, because a lot of people have a general sense of it, but not the full picture. Your Social Security retirement benefit is based on your earnings history. The SSA looks at your 35 highest earning years, adjusts those numbers for inflation, and uses a set formula to calculate what is called your primary insurance amount. That is your base benefit. That is the number you see on your Social Security statement. But here is something that surprises a lot of people. That base number is almost never the exact amount that hits your bank account. What actually lands in your account is your benefit after deductions. And those deductions can come from more than one place at the same time. The most common deduction is Medicare Part B. If you are enrolled in Medicare and receiving Social Security, your monthly Part B premium is automatically taken out before your benefit is ever deposited. In 2025, the standard Part B premium is $185 a month. In 2026, that number went up to $202.90. The second source of deductions is voluntary federal tax withholding. If you ask the SSA at any point to withhold income taxes from your Social Security, that is still happening right now, whether you remember it or not. And the third source, the one that has caused the most confusion and concern in the past year, is overpayment recovery. If the SSA ever paid you more than you were entitled to receive, they have the right to take that money back by reducing your ongoing payments. And the rules around how aggressively they do that changed significantly in 2025. That is what we are going to spend the most time on today. Let's talk about Medicare premiums first, because this is the deduction most retirees already know exists, even if they do not always know the exact number. Medicare Part B covers your doctor visits, outpatient care, lab work, and preventive services. And if you are receiving Social Security when you enroll in Medicare, that premium comes straight out of your check automatically. You never see it. It is gone before the deposit ever reaches you. For 2025, the standard premium was $185 a month. That is $2,220 a year. Over 5 years, that is more than $11,000 coming out of what you thought was your full benefit. Now, $185 is the standard rate, but not everyone pays the standard rate. There is something called IRMAA, which stands for the Income-Related Monthly Adjustment Amount. If your income from 2 years ago was above a certain level, Medicare charges you more. In 2025, that threshold was $106,000 a year for a single person, or $212,000 for a married couple filing jointly. If you were above those numbers, your Part B premium was higher, significantly higher in some cases. At the top income brackets in 2025, Part B alone could cost more than $600 a month per person. Here's where it gets tricky for a lot of retirees. Medicare looks at your income from 2 years ago to set your current premium. So in 2025, Medicare was using your 2023 income. If you had a high income in 2023, maybe you were still working part of the year, or you had a large one-time distribution from a retirement account, but your income dropped significantly in 2024, Medicare may still have been charging you a higher premium. And here's the important part. You can appeal that. It is called a life-changing event appeal. If your income dropped due to retirement, the death of a spouse, a divorce, or other qualifying reasons, you can ask the SSA to use a more recent year to calculate your premium. This is something a lot of people never do because they do not know it is an option. If this sounds like your situation, it is worth a phone call to the SSA this week. Now let's talk about the second deduction that quietly drains a lot of Social Security checks every month: voluntary federal tax withholding. Social Security benefits can be taxable, depending on your total income. If your combined income, which includes your adjusted gross income, any non-taxable interest, and half of your Social Security benefits, exceeds $25,000 a year for a single filer, or $32,000 for a married couple, part of your Social Security benefit may be subject to federal income tax. To help manage that tax bill, you can ask the SSA to withhold a portion of your benefit each month. The options are 7%, 10%, 12%, or 22% of your benefit. You do this through IRS Form W-4V. For some people, this is a smart move. It spreads out the tax payment so you do not get a big surprise in April. Completely reasonable. But here's the part most retirees overlook. If you set up that withholding years ago and your income has changed since then, that withholding election is still active. The SSA does not automatically adjust it when your situation changes. Whatever percentage you chose back then is still coming out of your check every single month. Say your monthly benefit is $1,700. If you have 10% withheld for federal taxes, that is $170 a month coming out. That is $2,040 a year. If your income has dropped since you set that up, and you no longer owe that level of tax, you are potentially handing the government money you did not need to give them, and waiting until tax time to get it back. If you are not sure what your current withholding election is, you can log into your My Social Security account at ssa.gov, or call the SSA directly at 1-800-772-1213. You can change or cancel your withholding at any time by submitting a new Form W-4V. This is the part most retirees overlook. A decision you made years ago is still affecting your monthly deposit today. Now let's get to the big one: the rule change that has caused the most disruption in the past year. Social Security overpayment recovery. An overpayment happens when the SSA pays you more than you were supposed to receive. This can occur for many reasons. Your income changed and was not reported. You returned to work. Your marital status changed. In some cases, it is simply an SSA administrative error. And because of staffing issues and system backlogs, these overpayments are sometimes not caught until months or even years after the fact. When the SSA determines you are overpaid, they send you a notice, and then they recover that money by reducing your ongoing benefit payments. Here is where things changed significantly. For a long time, the default withholding rate for overpayment recovery was 100%. That meant, in theory, the SSA could take your entire monthly check until the debt was paid off. Then, in 2024, the SSA reduced that default rate to 10%, responding to widespread concern that full withholding was leaving vulnerable people with no income at all. But in March 2025, the SSA reversed course. Effective March 27, 2025, the default withholding rate went back to 100% for new overpayment notices. That meant anyone who received a new overpayment notice after that date could have their entire monthly check withheld. The public response was significant. Advocates, lawmakers, and beneficiaries raised serious concerns about the impact on seniors and people with disabilities who depend on their monthly payment to pay rent, buy food, and cover medication. As a result, the SSA revised the policy again. Effective April 25, 2025, the default withholding rate was set to 50% for new overpayment notices. So where does that leave things today? If you received an overpayment notice before March 27, 2025, your repayment arrangement was generally not affected by these changes, and no action was required from you unless you wanted to request different terms. If you received a notice after March 27th and before April 25th, the 100% default may have applied. If you received a notice on or after April 25th, 2025, the current default is 50% of your monthly benefit being withheld until the overpayment is repaid. For SSI recipients, the withholding rate has remained at 10% throughout all of these changes. Now here is the critical thing you need to know, regardless of when your notice arrived. You have options. If the default withholding rate causes financial hardship, you can contact the SSA and request a lower recovery rate. They are required to consider your ability to pay. If you believe the overpayment was not your fault, you can request a waiver. If the waiver is approved, you may not have to repay the amount at all. And importantly, while a timely waiver request is pending, the SSA will not pursue collection. If you believe the overpayment determination is wrong, that you do not actually owe what they say you owe, you have the right to appeal. The window to respond is typically 60 days from the date on the notice. If you received a notice and did not respond, or were unsure what to do, it is not too late to call the SSA and ask about your options. The number is 1-800-772-1213. You can also visit your local Social Security office in person. Let me walk through what all of this can look like together with a real-world example. Say your full Social Security benefit is $1,800 a month. You are enrolled in Medicare. You set up 10% federal withholding years ago, and last year you received an overpayment notice that you set aside and did not act on. Here is what your deposit might actually look like. Start at $1,800. Subtract the 2025 Medicare Part B premium of $185. You are at $1,615. Subtract 10% federal withholding, which is $180. You are at $1,435. And if overpayment recovery is active at 50%, that is another $900 gone. Your actual deposit could be $535. Not because your benefit was cut, not because of any penalty, simply because of stacked deductions that you may not have been tracking. That is a dramatic example, and not everyone is in that situation. But even without the overpayment, the gap between your stated benefit and your actual deposit can be several $100s every month, and nobody calls to remind you. Before we move on, I want to take a moment to protect you from something else entirely. Whenever there is news about Social Security policy changes, scammers pay attention. They use that confusion to take advantage of people. And right now, with all the attention on overpayment notices and benefit changes, it is more important than ever to know the warning signs. The Social Security Administration will never call you out of the blue demanding immediate payment. They will never threaten to suspend your benefits over the phone. They will never ask you to pay anything with gift cards, wire transfers, or cryptocurrency. If you get a call like that from someone claiming to be the SSA, hang up. It is a scam. The IRS will also not call you threatening arrest or legal action without first sending you a letter through the mail. Phone calls claiming to be from the IRS demanding immediate payment are scams. Be careful with mail too. Scammers send very official-looking letters designed to mimic government correspondence. If you receive a letter about an overpayment or a benefit change and something doesn't feel right, do not call the number on that letter. Go directly to ssa.gov or call the SSA at the number you look up yourself, 1-800-772-1213. And never give your Social Security number to anyone who contacted you first. Whether by phone, email, or text, if they reached out to you, that information should stay with you. Please share this with your family, your neighbors, your friends. These scams specifically target older Americans. You worked your entire life for these benefits. Do not let someone steal them in a 5-minute phone call. So let's bring this back to what matters most right now. Who is actually affected by all of this? If you are receiving Social Security and enrolled in Medicare, your Part B premium is already coming out of your check. That is standard. But if you have not looked at your actual benefit amount and your actual deposit side by side recently, you may not know whether you are also paying an IRMAA surcharge, and whether that surcharge still reflects your current income level. If you set up voluntary tax withholding at any point in the past and have not revisited it, that withholding is still active. It could be the right amount for your situation, or it could be too much. Either way, it is worth knowing. And if you have ever received any correspondence from the SSA about an overpayment, even if it was a small amount, even if it felt confusing, even if you set it aside, that situation may still be open. Under the current rules, the default recovery is 50% of your monthly benefit for new notices. And the rights you have to appeal, request a waiver, or negotiate a lower rate are real, but they require you to act. The people most at risk right now are retirees who retired in the last few years and have not gone back to review their benefit setup. People whose income changed significantly through part-time work, pension payments, or retirement account withdrawals. That may have triggered a Medicare surcharge they were not expecting. And people who received SSA mail in the last year or two that they did not fully understand. Here is what I want you to do this week. Log in to your My Social Security account at ssa.gov. Look at your current benefit amount. Then open your bank account and look at your last deposit. Compare those two numbers. If there is a gap you cannot explain, call the SSA and ask them to walk you through your current deductions line by line. That is your money. You are entitled to understand exactly where it is going. So here is what this really comes down to. The number on your Social Security statement is not always the number that hits your bank account. And there are 3 main reasons for that. Let me quickly recap each one. The first is Medicare Part B premiums. The standard rate in 2025 was $185 a month, and it went up to $202.90 in 2026. If your income in the relevant tax year was above the IRMAA threshold, you are paying more than the standard amount. If your income has since dropped due to retirement, a death in the family, or another qualifying event, you may be able to appeal that surcharge and have your premium recalculated using a more recent year. The second is voluntary federal tax withholding. If you ever filed Form W-4V to have taxes withheld from your Social Security, that election is still active. The options were 7, 10, 12, or 22% of your monthly benefit. If your income has changed since you made that election, it may be worth revisiting. You can update or cancel it at any time. The third is Social Security overpayment recovery. The SSA changed its default recovery rate multiple times in 2025. As of late April 2025, the current default for new overpayment notices is 50% of your monthly benefit. If you received a notice and it would cause genuine financial hardship, you have the right to request a lower rate, request a waiver, or appeal the determination. Do not ignore these notices. Act within 60 days. And one more thing to keep with you always. The SSA will never call you demanding payment. If someone does, that is a scam. Hang up and verify everything through ssa.gov or by calling 1-800-772-1213 yourself. If you remember nothing else from this video, remember this. Check your numbers. Log into your My Social Security account. Compare your benefit to your deposit. Ask questions if something does not add up. You earned every dollar of what you receive, and you deserve to know exactly what is happening to it. That is what this channel exists for. We cover Social Security updates, Medicare rule changes, IRS guidance for retirees, and benefit protection information on a regular basis. Always in plain English, always focused on protecting what you have worked for. If this video helped you, hit subscribe so you never miss an update. Take care of yourself, check your account, and we will see you in the next one.